to the show. Jen, this is a big one today because not only are we talking about earnings, but there's a bunch of other topics coming up with Amazon. What did you see today in social media or anywhere that you were looking on information on Amazon, Jen?
I would say that the noise all around, Kevin, is super positive for Amazon. You know, we've had a crazy week in earnings, and I can't believe it still continues today post-market. And many analysts believe their momentum will actually continue post-pandemic, even as we see the economy reopening, because they are just such a strong company. I mean, we saw them as a pre-pandemic winner. We saw them as position themselves as a winner during the pandemic. And now the question is, can they continue this momentum, you know, even as things start to normalize? Now they have seen record profits, surging sales, and subscriber growth. So pretty much across the board, this company looks extremely healthy, but everyone really wants to know the next catalyst to push the shares higher, because they haven't hit all-time highs since, I believe, it's September of 2020. Now, the stock is up today ahead of this report, and they're up about 12% this month and about 4% this week, but they have underperformed the NASDAQ so far this year, up only about 6% compared to the NASDAQ's gain of about 9%. Now, analysts are expecting roughly $105 billion on EPS of about $9.75. And in February, they actually guided their first quarter sales to be between $100 billion and $106 billion, which would mark significant growth from last year, which was only about $75 billion. It's funny I say only $75 billion, but you know, it's all relative when we're talking Amazon. Now, the tech giant continues to obviously dominate its e-commerce, its retail space. This is a company near and dear to my heart because it delivers things cheaply and relatively on time, things that I wouldn't necessarily be buying without a car in the city. But they also have expanded into so many different areas. They're kind of like a catch-all at this point. They just announced they'll be streaming the NFL's Thursday night games by 2023, which will only strengthen its position as an advertiser and also as a media company, as we know with Amazon Prime Video remaining relatively competitive in a super saturated space. And then, of course, we have the giant that is AWS, which continues to be their main source of profit. And many analysts are looking for any sort of guidance on the upcoming CEO, Andy Jassy, as he takes over the company in the third quarter of this year. Now, what we're seeing with earnings so far is the secular shift in cloud remains super healthy for companies across the board, as we've seen in Alphabet, Microsoft, despite their mixed reaction following earnings, Apple. So I believe that Amazon's position in the cloud space will only benefit them going forward. And it's actually sort of wild. If you look at the strength of these massive tech companies, I mean, we're talking Amazon, Alphabet, Facebook, Apple, Microsoft, they have grown so much over the past year just with the increased digitization movement that now they are worth a collective $8 trillion, or they were at the end of 2020, growing from about $5 trillion at the end of 2019. So all of these companies' exposure to these high-tech markets has done them well. And social media, I mean, just loves Amazon. Across the board, expectations are super high ahead of this report. And they've had some positive news this week, which is actually what I sort of wanted to talk about, because, you know, aside from the fact that they are a dominant company, they've done some things that are for the bettering of society, I believe, which I love to talk about. So our first tweet actually quotes the Real Fly, who says, Amazon to hike wages for over 500,000 workers. And then the tweet responded and said, you don't do this unless massive earnings blowout. So that is absolutely so true. I would say that increasing your wages for 500,000 employees is typically a pretty strong sign your balance sheet is doing well. And they just announced at the end of 2020, they have now over 1 million employees. So this is just a massive company. And we heard over and over yesterday from Jerome Powell how employment remains an issue for our society. So I think that Amazon continuing to just pay its employees more is a great step in the right direction. But we heard some noise on Tuesday that the stock could potentially be splitting. Now, this is, of course, speculative, but our next tweet sort of touches on that from Ross Gerber, who says, Amazon should split 10-1. This is absurd. I'll take 3 shares for 10K. It's time. So I'm not so sure about the 10-1 stock split, and the stock did rise following this news. But I have to say, from an investing standpoint, that right now Amazon's sitting about $3,500. It does seem a little bit unapproachable for someone like me that's, say, young and doesn't necessarily want to buy multiple shares of a $3,500 stock. So I think a stock split seems like a great thing. So, Joe, I'm curious your thoughts on, of course, this is all speculative, but I'd be curious to know, what this could mean for the stock if they did decide to split.
Well, what's interesting is, stock splits, while we think about them in terms of, what that does, it makes it approachable, right, for a larger population to be able to invest in those names. It really doesn't change the value of the company, right? I mean, it's basically an accounting measure where you're getting more at a lesser value. So basically that it nets out. All that being said, traditionally off of stock splits, you do tend to see some follow through because you do get that kind of next level of investor come in. And I would love to have the opportunity for the next generation of investors to really participate in this company, because it's a wonderful company. AWS is really driving growth going forward, as you said, Jenny. And to make this company and stock available to a wider part of the masses makes a ton of sense to me.
Yeah, Jenny, I think that is the really hot rumor going in, but make sure our viewers know it's just a rumor. There is a lot of speculation about this. You're seeing a lot of option activity and activity in the name, but still no official statement from Amazon on that. So everyone understand that nothing has been, nothing has been announced yet. Okay, so with that news, we will say goodbye to Jenny Horn, as we always do at this time, and welcome in the co-founder of LikeFolio, Mr. Andy Swan, to the show. He's going to take a look at how they interpret the social data on Amazon. And what do you have for us today, Andy? I see a lot of dots. I see a lot of numbers. Tell us all what this means.
Yeah, we thought we'd take a little bit different approach because I think you guys are right. Going into earnings, there's a lot of stories about Amazon. There's a lot of speculation about stock split. Everybody already knows that Amazon's one of the greatest companies in the world now and historically. So we thought we'd take a little different look at LikeFolio data, which is looking at consumer interest, consumer demand for the products that they sell and the experiences that they sell, and map that in terms of growth rate and also consumer happiness level. And so we did this on what we call scatter plot. And what you really want to see is a company up at the top right of this chart, because it means that the purchase intent change, or the number of people showing high consumer demand for the products, is rising, but also the number of people that are happy with the products that they buy is very high as well. And so we plotted this Amazon against Shopify just because the difference was so stark. So you can see Amazon over on the left, a little bit lower purchase intent mentions. A lot of this is due to year over year factors. There was so much going on with the pandemic that the growth rate was really high at that time when people were stuck at home. But the other thing about it is Amazon a little lower in consumer happiness, and Shopify being able to put up such impressive numbers in consumer demand growth and consumer happiness at the same time while being, a significantly smaller company, tells us that this whole theme that we're just starting to see of Amazon finally getting competent competition is starting to take hold. So it's not about this earnings report coming up. You think, it's going to be, as always, a good report from Amazon, great company. But from a longer term, more macro type of theme, we're starting to see consumers really get comfortable with the idea of going straight to the horse's mouth for their shopping. They're more comfortable than ever going directly to a website, clicking a few buttons on their phone. Apple makes it really easy for them to make purchases, just like they used to do with Amazon, but now they're doing it more comfortably across the entire web, and a lot of that is driven by the infrastructure and technology that Shopify is providing to these brands. And so we think of this, we've talked about before, Walmart, Target becoming much more competent competitors to Amazon. But what Shopify is doing is really democratizing that across the internet. And we think that does pose a significant threat to Amazon over the course of 2, 5, 10 years out from now.
Oh, sure. Hey, a quick question for you. Does that mean if you're looking at it as an investor, right, as a trader, and you're going to say, okay, can I look at the Shopify move and then say that translates over to Amazon. When you look at when I look at a scale like that, does that tell me that I can't make the comparison? I can't use that as a reference in terms of what Amazon might look like post move or post earnings?
Yeah, I think you can look at Shopify and say, look, the overall consumer interest for buying things online is very, very high, and that bodes well for Amazon. But the difference between the two companies is quite different. I mean, Shopify is in a very different part of its growth trajectory. Amazon's much more mature, and they are tackling two different things and in a competitive manner. So I think of them less as congruent with each other and more as competitors, vying for a completely different type of shopping experience. And I think right now, I would say Amazon's a little bit in the rearview mirror in terms of how people shop. But again, great company. They're powering most of the internet. And so this is like comparing two really, really big Goliaths going forward.
Andy, just to dumb this down for Kevin Hinks' sake, the size of the dot on this map, right, is indicative of the size of the company, correct? That's why Amazon's is much bigger than Shopify. And then what you're talking about in terms of top right, really favors Shopify on this graph, as opposed to Amazon, which is a massive behemoth of a company, but clearly not with the same positive metrics as Shopify is seeing. Is that what I'm seeing?
Yeah, that's exactly right. And the idea here is when we've seen companies fall into that very top right of this scatter plot, where they're growing consumer demand and making customers very, very happy at the same time. Those are the companies we have seen historically be the company of the future, make huge returns over time. Tesla's fallen into that category. Netflix fell into that category historically. Roku, they stand out from competitors in a big way. It's not as much a dig on Amazon as it is showing that there is a little bit of a ground shift going on from a consumer perspective in how they shop, and Shopify is the one ready to power that next move forward. And so you've got it exactly right. We think Amazon's still a fantastic company, going to have pretty good earnings. We'll see if they can meet really lofty expectations. But in terms of going forward well into the future, they've got a lot more work cut out for them than they have over the past decade.
One last thing, Andy, real quick before I let you go, because I think we're touching on a pretty powerful piece of data here that we're seeing. Do you have any, do you use or do you identify these companies that are showing up in that top right corner? Do you lump them together? Is there a list you make? Is there a publication that LikeFolio uses to show, hey, we got another one of these companies and it's going all top right? So if that's the case, that a top right indication on this graph indicates a stock that could really outperform. Do you guys publish that anywhere?
Yeah, we just started on this. This is actually a new lens that we're seeing companies through, because we just looked back at the data and saw this kind of time and time again happening. So we are in the process of creating what we call that outliers report. These companies are outliers.
Sure.
And we really, really love to see that really small dot at the top right. It means the company's probably flying under the radar with Wall Street, but is really starting to make headway with consumers. And as we know, that's where in the long term, companies win or lose based on how well consumers react to the products and services that they come out with.
Yeah, that is fascinating data. Maybe much more for Shopify than Amazon, but still very fascinating data. Andy Swan, co-founder of LikeFolio.com. Great presentation. As always appreciate your contribution to Fast Market. Have a great day, sir.
Thank you.
All right, now.